Hello friends, in today's video we are going to talk about one company which is the market leader in the retail segment, and today this company has also declared its results. So let's check the results, check the expectation, and then we'll look at the company details, its business, its numbers. So let's start. So here you can see that Dmart Q3 results are out and PAT rises by 7% on year basis. For people who do not know what is PAT, PAT is profit after tax, and profit after tax for Dmart for Q3 is 590 crore. And then it also says that it misses the estimate sharply. So now let's check what was the expectation in terms of revenue and the PAT. So here you can see that the profit was 590 crore for Q3 and the estimated number was 672 crores. So market was expecting a profit of 672 crores after tax, but company has declared a profit of 590 crores. So in terms of the expectation has been missed by Dmart. Now if you look at the revenue increased by 25.5%. So revenue is nothing but their sales. And for Q3 it was 11,569 crores, which they are mentioning was in line with the expectation. So in terms of the revenue expectation, Dmart has met that, but in terms of profit after tax expectation, Dmart was not able to meet that expectation. Now let's see how the market will react on Monday. And now let's look at the company details. This is the chart for Dmart and it is currently trading at 3,850 levels. And if I look at 1 year return, it's a negative minus 10%. And if I look at 5-year return, it is still very good, 236% return. And from its top, it is currently down by around 27%. And this is not the first time that this share has dropped. You can see earlier as well, this share fell by 24%, which was in 2018 to 2019. But after that, what happened? It is in front of you. And during this time also, you'll see that the share was down around 17%. And after that, you'll see that share moved towards the top. And now it is again showing the same trend, wherein I believe the share is now consolidating and getting ready for the next run. So in terms of the business, I'm sure most of you must be aware what type of business Dmart is into. But for those who are new to this, Avenue Supermarts operate supermarkets under the brand name Dmart. So what they do is they open big stores wherein they provide very good discount to the retail customers. And the business model that Rakesh Damani ji has used, who is the founder and the promoter of Dmart, it is similar to what Walmart did in US. So he is following the same model in India and the company is also doing very well. And recently there was a commentary from the management wherein they said that they are going to 5x the amount of stores that they currently have. So the company is focusing on rapid expansion, which eventually is going to help the business revenues and profit and then the share price as well. And here you can see that how they do the expansion of their stores. So company follows a cluster based expansion approach wherein whenever they move to a new location, they open one shop. They try to identify the trends, what things are getting sold fast, what is the customer demand, and then they expand in that region, operating on the same data which they collected from the first shop. And they have also started their e-commerce platform which is known as Dmart Ready, and that segment has completed 5 years of service. And here you can see that company also closed down 2 of its stores in Mumbai in August 20 and converted the same into the local fulfillment center for e-commerce delivery. So company is not only focusing on the walk-in customers, which is their main source of revenue, but is also slowly moving towards the e-commerce segment. And under the e-commerce segment, the company is facing competition from companies like Amazon Pantry, JioMart, which has established its presence in major cities. And the competition is increasing. So the market cap of this company is 2,50,000 crores. So it's a big company, a blue chip company. And now I'm at the yearly numbers of this company, and now let's keep an eye on the sales. So in March 2012 the sales were 2,200, then it increased by 50%, then an increase of 40%, then 37%, 30%, 38%, then it increased by 26%, then by 33%, then by 24%, and then it was in negative due to COVID, and then again we saw an increase by 28%. And for the 12th trailing month, you can see it is already close to 30% increase. So you can notice here that the sales are continuously increasing at a very good percentage. Being such a big company also, the sales numbers are increasing at a very healthy rate. And the reason is because India is very big and this company has still not covered major parts of India. There are still a lot of states, cities, towns that this company has to cover. So there is a huge potential. And some of you might be getting a question that there are already big players in this segment, which is like Amazon, Flipkart, Jio. And because of these players, then Dmart Business might get impacted. If you are getting that question in mind, good thinking. But let me share 2 things with you on that. One is that this industry is very big. This retail industry in India is very big. It can easily absorb 4 or 5 players. And the example to this is like a IT industry in India. So you see in IT industry, you have TCS also, you have Infosys also, you have Wipro also, HCL, Tech Mahindra, LTI. These are all big companies. But does this mean that because of TCS, Infosys is not able to grow? Or because of Infosys, HCL is not able to grow? That's not the case. Why? Because the industry itself is so big that it is able to absorb multiple players. Same is the case for retail industry as well. Even with Jio, Amazon, Flipkart and other players, Dmart can and will continue to do well in future as well. These are obviously my views. You are free to disagree with them. Now let's look at the operating profit as well. So you'll see the operating profit was 138 crores, then it increased to 215, then 341, then 446, then 664, then 969, then 1300, then 16, then 21, then 17, a dip because of COVID, and then it again increased to 2500, and for the 12 trailing month you can see it is now close to 3500. So one thing to notice here is that this company is almost doubling its profit every 2 years, you can see, and here, then again you can see here and here, and now recently it is not able to double, but at least it is very close to doubling it. And this happens because when the company is small, it is able to multiply its profit very rapidly. As and when it starts becoming big, then obviously it will not be able to multiply within every 2 years. But still the rate of growth that this company is showing in the sales and the profit, it's still tremendous. It's still very, very healthy. So here you can see the sales compounding growth for this company in 10 years 30, 5 years 20, 3 years 16, and for the 12 trailing month it is around 40%. And for the profit compounding for 10 years has been 38%, 5 years 26, 3 year 19, and for the 12 trailing month it is 68%. And the stock price CAGR compounding has been 26% for both 5 years and 3 years. And if you look at the shareholding pattern, you will see that the promoter holds almost 75% of the shares, which shows the amount of trust that the promoter have in the company. They do not want to sell their stake at all. 75% is the maximum the promoter can hold, and they are holding the maximum stake in this case. And FI holds around 8.63% and DI holds around 7.11%. And in the current quarter you will see that DIs have increased their stake and FIs have trimmed their stake, and public holds around 9.24% and their stake has also been similar. So shareholding pattern of the company also is great. And one more thing, in the public you will see that there is one person who holds 2.01% stake in the company. And who is this person? This person is the CEO of Dmart. So you can see that the promoters and the CEO of the company have full confidence in the company. They are not selling their stake. They are still invested in the company because they know that the company business is going to do well in future as well. This is just a temporary phase is what I believe, and an opportunity to invest in this company, because once it will start moving, it may not come back to the same levels as we have seen earlier in the chart pattern. And these are just my view and not at all a buying recommendation from my side. I'm just putting across my viewpoint on Dmart. You should also do your own study and then only take any decision regarding investment. Now we are at the chart for Dmart, and we have already seen there is a discount of 27% from its top, and currently share is trading at its support level. You can see multiple times it has taken support here. In case next week it falls further and the market reacts negatively, and if you are able to get this share at around 3750 level or 3500 level, then in my opinion it will be the good level to get entry into the stock. But in case you do want to invest in this stock, do remember to invest for long term. Minimum 5 years is what you need to give to the company in order for the company to give you something back.